kind of show you guys how I believe in this new market. You know, you've heard the term shift. Everybody's talking about a shifting market. It's a new market now. I believe in the new market. We collectively, as agents and lenders and all the other partners in the transaction, need to work together to bring a buyer and seller to the table and help them see the value in doing business together again. As opposed to, you know, the reality is sellers are frustrated that their house isn't selling in 24, 48 hours right now. Or maybe it takes 2 weeks. Maybe it takes 30 days. Well, if you're, you know, I can remember back to 2017, 2018 when homes were on the market for 60 days pretty regularly. You know, it was that way, and sellers were a little more desperate to sell. So today, I really want to chat with you guys about something pretty cool that we've rolled out called a Buy Before You Sell program. And I'm not really into pitching programs and products. What I want to do is show you guys some value and hopefully help you to bring buyers and sellers together and help you to have some additional tools in your tool belt to make transactions happen. So please interrupt me, ask questions. If you think of anything that maybe some of your other colleagues might want to hear, you know, ask those questions. About how much time do we have? This will probably take me about 20 minutes if that's okay, and then I can, okay, awesome. So we'll pop through here. Obviously, enter to win $25 gift card from Amazon. Everybody loves a little bit of Amazon love. So let's first talk about the market and how did we get to where we're at right now. You guys have heard about the Fed raising interest rates, right? It's a big topic of conversation. So first of all, I want to show here that every time the Fed is meeting this year, they're talking about raising the Fed funds rate 50 to 100 basis points. Just a little bit of market education. And Nigel, feel free to check me if I'm getting too complicated in this, because I'm a little of a market nerd, but I want to show you guys why the Fed funds rate changing doesn't actually affect mortgage rates, okay? But it's okay to let your clients think that, because in somebody's mind, if they think rates are going up, I better buy now, that's fine. But the truth is, every time the Federal Reserve raises the consumer rate, right, the rate that banks are borrowing money one from another, it's already baked in. It's priced in the mortgage markets. So when the Fed raised the rate 75 basis points 2 weeks ago, we actually saw mortgage rates go down a little bit. You may have heard that. Mortgage rates came down a little bit, right? So what we could see by the end of Q4, by the end of this year, is a pullback. We're starting to curb inflation. We're starting to curb consumer spending. We're into kind of a recession cycle, if you will. I'm not a doomsday guy on the economy. I believe there's money to be made in a recession. I'm going to talk about that a little bit. But you want to pay attention to the actual information, not the news media. And please educate your clients on this. With CNN and Fox News and USA Today and Wall Street Journal, anybody out there that's selling publication, they're selling headline. They're selling viewership. They're trying to pull people in. So when I jump on my phone and get into Google and it tells me the housing market is in a spiral, it's a crisis, it's a, you know, that's not true. It's just simply not true. And you guys know that, but we have to educate the consumer. So here's some information for you. Homeowners have lots of equity and underwriting remains strong. So what we're looking at here in the green, that's mortgage debt versus borrowers with a credit score under 700, okay? So you can see we're starting, and the number on the left-hand side, and by the way, is in millions, and you can see that green is going down, which means now in 2022, we have the least amount of consumers with mortgage debt and a credit score under 700. Simply means homeowners are super well qualified right now for the most part. And this is starting back in 06 and coming to 2022. Then the blue line is showing homeowner equity. So you can see in 2006, we were up. We kind of took a dip down in 08, 09, 10, 11, and we came up to the most amount of equity in property that we've ever seen right now in the history of the United States. Current mortgage rates compared to the last 5 decades. So right now, current rate being kind of like, you know, 720 credit score, 20% down rate with no points, right? That's about 5.8, 5.6, 6%. It's hovering in there. But if we look at this graph, it's easy to see. We've got the 70s, 80s, 90s, 2000s, and 2010s. What's really important to help consumers focus on is if you look back into the 80s, people were happy to get a 12% interest rate. My dad bought his first home, I think it was 13 and a quarter, and he told me he was pretty happy about that in 1985. When I first came into the mortgage business in the early 2000s, so you see the average rate here at 6.27. Well, 2003, 2004, I was funding mortgage loans at 8 and 9%, and people were elated. They were super happy because we were bringing their rates down. And then we came into the 2010s and we had an average of 4.09 from 2010 to 2020. So that's the best time to buy a house, right? You guys would probably agree with that. My house, currently we financed it in 2021, my rate's like 2.375. Pretty happy about that. But my wife and I are actually selling our home and we're buying another property right now and my rate is going to be significantly higher. Why am I doing that? Well, because it's not really the interest rate that I'm concerned about, it's the positioning in the market. And that's what I think we need to educate buyers and sellers on. So a correction is a decline of 10% or greater in the price of a security, asset, or financial market. We are in a normalization pattern, but we are not in a market correction when it comes to house values. We are in a market correction when it comes to interest rates. So I'm going to say that again. We are in a normalization when it comes to house values, meaning we have seen appreciation rates at 20, 30, 40% over the last couple of years. That's normalizing. It's coming back down to maybe 10, 15%. Does that make sense? But when it comes to interest rates, we are seeing a correction. What happened from 2010 to 2020 was the Federal Reserve just dumped a ton of money into the mortgage-backed securities market. They bought a bunch of mortgages and they created false rates. And that's why we saw rates in the 2s and 3s and 4s for a long period of time. Federal Reserve stopped doing that earlier this year. It's caused a market correction, which has brought a decline in interest rate, meaning the rates are actually rising, decline in the value of the rates. So that's a 10% or greater change. So that is a market correction. In layman's terms, when you're talking to a buyer or a seller, and you're talking about interest rates, because they will ask, right? Do they ask those questions? What are some questions you guys might get from a buyer or seller about market, rate, things like that? Okay, fair enough. So they're going to ask, if I sell my home, what's that going to look like getting me to the next home? And a lot of times you're going to tell them, well, you got to talk to a lender. But something that you can tell folks is this. The mortgage rates have gone up because the market is correcting. That's all you have to say. Mortgage rates have gone up because the market is correcting itself. You want to talk to a lender and get a clear mortgage plan. And that's it. And that really helps people to see, oh, okay, it's not just rates are going up, the world is ending, everything's on fire. It's the market's correcting. And then we can come behind you and back you up with data to help educate those folks. Like I was talking to you about the guy that you had the listing appointment with. We want to educate people so they understand if you're going to sit and wait for the price of homes to come down or for rates to come down, you're going to be waiting a long time. Because the price of homes is probably not coming down. It's probably going to normalize, as we've seen, meaning instead of going up, it's going to stay more level. But rates are probably not coming down significantly anytime soon. So I'm going to jump into a couple of things. Recession does not equal a housing crisis. One of the biggest things that I'm promoting right now to anybody we talk to is even though we're going into and we are in an economic recession, 2008 was the only time that housing was tied to a recession with an issue. Does anybody know why that was? Go ahead, Nigel. Go ahead.
I mean,
blame it on us.
Yeah, essentially, there was a poor oversight, poor lack of judgment on home ownership, and it all came to light. So, basically, people freaked out.
Yeah.
And the government freaked out. I mean, that's the easiest way to say it.
It
became very emotional.
Bad mortgage loans. Yeah. That was effectively what it was. Bad mortgage loans. Hello. Bad mortgage loans created the only recession that was tied to housing ever. So what I'm preaching a message on right now is, hey, we are going into some economic challenges of a recession. But here's the thing. We had a recession in 2020. Nobody talks about that. But we had a recession in 2020. Guess what happened to housing? Went up 6% during 2020. And it started this launch pad of aggressive home values rising. It was crazy. So the message here is, number one, when people ask you questions about financing homes, interest rates, whatever, hey, it's a market correction. That's all it is. Rates have adjusted this year. It's a market correction. And then when you're talking to people who are maybe scared of the recession, it's, hey, keep in mind that real estate is a safe asset during a recession. And except for the 2008 recession, every other recession we've seen, real estate has gone up in value. And that's a really easy way to kind of talk through that. Does that make sense? Home sales forecasts are strong this year. This is Freddie Mac. This is in millions, 6.9 million estimated transactions. So that's continuing to go in an upward trend. All right, so to kind of finalize my market update, this is good news. Record low inventory has driven a shift. Market's changing. Inventory is starting to double in many places. I was looking up numbers for the Fort Hood area. Danielle, maybe you can help me with this. We're seeing a lot of new inventory come on the market, right?
Yes, especially new homes.
A lot of new homes, yeah, builders. When I went on Realtor.com and just did a simple search, it's flooded with new home inventory. So we're seeing a lot of opportunity there. This is a big one. Investors and iBuyers are pulling back. So investors, I'm not talking about mom and pop investors, I'm not talking about us and our families. I'm talking about these big hedge funds and huge companies that for the last 2 years have been buying up, single family homes. They're pulling back because the cost to do business is higher right now. And then the iBuyers, Zillow will buy my house or Opendoor or whoever, they're pulling back because they're starting to lose money like crazy. And their investors are calling them on the carpet. These are bigger opportunities for us who are running our mom and pop kind of business as a real estate agent lender, because these guys are kind of going away. We're also likely to lose around 125,000 people in the real estate industry this year. That's, again, in my opinion, great news for us. Especially folks like you guys, you're breaking into a new market. You have a new opportunity with a different focus and a different viewpoint. You see, like you said, an opportunity to learn, an opportunity to grow, an opportunity to educate people, right, on their track of why should I sell, why should I buy, why is it a good time. Rates are higher, we get that. The only other thing I was going to say is we got to set expectations here, guys. It's the key to serving our clients. So when you list a home, obviously I'm sure Danielle and the other folks that are educating your team here, you're talking about, hey, let's tell people your home's not going to sell maybe in 24 hours. Gosh darn it might take 2 weeks. Imagine that. Gosh darn it, you might have to pay closing costs again. Imagine that. Which Amanda and I were talking, veterans love to pay closing costs for each other. They really do. I love to see that, Hey, I got closing costs. I want to pass that along to the next veteran who buys my house. So I see this as an exciting time. We need to convert conversations to active contracts at a higher rate than we ever have before. This we talk about in my office all the time. We want to convert a conversation to a contract, a conversation to a contract. How do we help our realtor partners convert conversations to contracts? Well, we want to come alongside you guys and help you to take those leads that you work super hard for, those referrals that you work super hard for, and have good quality conversations that convert into a buyer list contract. So as a lender, we work a little bit differently because we want to work with your sellers too. And maybe they're not even going to use us, but we bring a value add to the table where we'll help your seller to see the value in selling their home. Even if they're moving out of state and they're not going to use us for a mortgage. We want to have a conversation with that person as what I call a third-party professional voice, somebody who can help validate the data that you're giving them and help the seller or the buyer to make a data-driven decision, not just an emotional decision. Does that make sense? Any questions on any of this? Is this good information?
It is, and I'm going to talk about the 125,000 people in the industry. Texas Realtors just came out with a number yesterday that literally instead of a 10% net growth, we're going to have a 4% net growth. So that is a very real across the state of how many people are going to leave. So.
And maybe you see this differently than I do. I'm just curious your opinion. I see that as a great opportunity for us.
It is an amazing opportunity. One, because you're actually going to have people in the field who want to help clients.
Yes.
Not just chasing dollar signs. So, and that's the people who are going to bounce out. The ones that are all they care about is money, they're going to bounce out because people see through that.
Can you hold
they
that over for her so we can record her voice?
Like they really haven't had to, work. And the last couple of years, you haven't had to work.
The deals were falling from the sky.
And now we're going to see our market switch back into what it was in 2017, 18, 19, where things were staying on the market longer. You were having to compete for listings. And so understanding that your relationships with people is what's going to push you forward rather than chasing the money train.
And by the way, we're recording this so we can send it out to the whole team.
Perfect.
So that's what he's got. There's a little microphone. But here you said it so perfectly. Do you remember what the average days on market for a listing was in 18 or 19?
About 85.
85. So I said 60. I was way off.
Yeah. So we
85.
in our market because we had so much inventory because every time we have that PCS season, you have a lot of inventory, and buyers could be picky.
Yep.
There were buyers that you would show 60, 70 houses to before you ever found one. And it was the norm.
2020 and 2021, it was not that way.
It's
So,
like, hi, here's a house. Do you like it? We're dropping off right now.
Exactly.
So it's a definite shift, and we'll see it kind of become gradual going back to the way it was. but it's still going to go back there.
I love the opportunity we have right now. And that's what I really wanted to drive home today. If you hear nothing else, hear that we are in a shift creating opportunity. Okay, so I'm going to jump into some of this content here. Quick question. Who has had a client or has a client who doesn't want to sell because they think they couldn't find a home to buy? Has that happened to anybody? Has that happened to you?
Oh, yeah.
What's the normal kind of rebuttal or challenge that you hear?
So they're like, we want to sell high, but we don't want to buy high.
Yeah.
And so we're like, okay, well, the market's going to only increase. So if you want to make the most, you're going to have to spend some.
Yeah.
You know, and I'm like, and then interest rates, you can always refinance.
Right. Exactly. We say this oftentimes, fall in love with and marry the house, date the rate. Because you can always refi the rate. And by the way, we do a no-cost refi for anybody who purchases with us for up to 5 years. So if they purchase with us and they do business with us on the front end, we'll do a no-cost refi, meaning I'll waive my loan fees on any refinance for those folks within the first 5 years. So that's been really helpful for us. Just that gets people to say, oh, okay, cool. Because now they can conceptualize it. Yeah. A lot of people don't even understand the concept of refinancing, even though the average American family refinances every 5 to 7 years. No, 3 to 5 years.
3 to 5 years.
And they move every 5 to 7. Yep. So the average American family who owns a home refinances every 3 to 5, moves every 5 to 7. That's a lot of mortgage and real estate transactions, guys. I mean, not the presentation content today, but if you can build a client for life, I mean, you probably have clients for life. I have clients for life. I got people. We're doing a loan for somebody in San Antonio right now, and I saw the name come on my pipeline report, and I'm like, I know that name. I researched it. I helped her boyfriend buy. They're no longer together. I helped her boyfriend's sister buy. I helped her sister buy. I helped her mom buy, and now I'm helping her buy for the second time. And I'm like, that's amazing. And that's just because we're staying in front of people and we're preaching the message that, hey, you're going to do this every 3 to 7 years. You're going to do a transaction. We want to help you feel confident and comfortable and have professionals on your side. Okay, so here's the challenge that I really want to present. We looked at the graph earlier that showed consumer equity in homes is at the highest it's ever been. I think everybody can agree with that. So a customer has equity, they want to move, they don't want to move twice, and they don't want to be homeless. Customer has equity, they want to move, they don't want to move twice, they don't want to be homeless. Challenge, right? Now we're starting to see the market shift, and obviously it's becoming a little easier for buyers. It's not completely unlocked yet. There's still going to be these opportunities that we have to take to bring a buyer and a seller together and say, here's how we're going to make this happen. So we've put together a buy before you sell program. And it is not one of these high cost Homeward or, shouldn't even throw out names, but there's some of these programs that are pretty high cost. They're 2 to 5% for somebody to effectively borrow money to buy before they sell. What we've done is we've put together a program, and this works, by the way, for owner occupied. Hello. Owner, I'm good. Nice to meet you. Cherie? Cherise. I'm Scotty. Nice to meet you. So this works for owner occupied, vacation home, second home, and investments. Danielle had mentioned you guys talk to a lot of investors. So we have investors who are trying to offload a property, and then they see an opportunity and they want to buy the next one, and they're like, how do I make that happen? Because debt-to-income ratio can be an issue and things of that nature. Maybe they haven't sold the property yet and acquired the funds. Well, this will work for all those. So if needed, we can extract equity up to 70% on the exit home. So scenario, you got somebody who wants to sell. They've owned their home for 5 years. They paid $150K for it. Now it's worth $300. And they've got a ton of equity, but they have no cash. Well, what we can do is we extract the equity using a cash out refinance loan that gets paid back when they sell that home. And we help them buy their next home, ignoring the debt to income ratio on the home they currently own. And then they can pay us back once they sell the home within 6 months. It's a really cool way to do it. We do a TBD underwrite for the new home, omitting the payment on the old home. So this means we're underwriting the loan completely up front. It's guaranteed, and that way when you make your offer on the new home, there's no contingency to sell the old home. So you make an offer on the new home with no contingency. Everybody tracking so far? So we're eliminating the payment on the old home, no contingency. You list the old home for sale before the new home closes. We're going to require that home to be on the market. Doesn't have to be sold, doesn't have to be in a contract, just has to be on the market. And then you're going to close on the cash out and the new home on the same day. What's really cool about this is you can legitimately pull the cash out of the equity, and then close on the purchase of the new home same day, because we're using our bank funds to make that happen. And then you move into the new home and you sell the old home. Or if it's an investor, you start getting to work and getting a renter in there, whatever. I know this is a lot of data, so I'm going to give you guys a presentation, and I know this is not something that most lenders are walking in here talking about. So we want to help you guys to conceptualize this, because every time I talk to realtors about it, I get either blank stares or people looking at me like I'm crazy. They're like, you're giving away money? That doesn't happen. Well, you're right, there is some cost. If they do that cash out refinance, we charge 2%. So 2% of the loan amount that they take. So if they take $100,000, they're going to pay $2,000 as an origination fee to take that loan. It's pretty low cost. All right, so here's some features. We ignore the debt on the departing residence. It must have at least 30% equity. Okay, so we're going to do an appraisal. Sometimes we can get by with a desktop, but we're going to make sure that that home has at least 30% equity. They don't have to take cash from it. So if they've got cash in the bank, all we're doing is ignoring the debt at that point. They're using their own cash. If they need the cash from the equity, we'll help them with that cash out refinance loan. We'll close on the new home. We can go up to $5 million in loan amount, $2.5 million up to 80% loan to value. So obviously this can apply to larger projects, investors buying, larger value property, but it also does not have a minimum loan amount. I think 50,000. So can't do less than 50 on it. 600 minimum credit score. Condos, single family residence, condotels, acreage are okay. We can do unique property types. So this is a portfolio loan. Anybody ever heard of a portfolio loan? It simply means that where we are pulling the funds from, the bank that's issuing the funds is also holding the loan and servicing the loan in their portfolio. This loan is not getting sold off to Fannie Mae or Freddie Mac. It's being held by that bank and serviced by the bank. This is available to some niche clients: 1 year self-employed, asset depletion, work visa. Those are the top 3 questions that I get. Can you do self-employed? Yes, and we can actually do 1 year, as long as they have compensating factors and they'll qualify with the income we can prove. Asset depletion means, oh, I've got a $2 million trust, but I don't get income from it. Okay, well, we can qualify you based on the assets that you have. And then, of course, work visa. We run into this a lot. Folks that are in the country don't necessarily have their green card or their permission to live here long term, but they have a work visa. We can do that. We cannot do ITIN on this. They have to have a social security number. Owner-occupied second home and investment, all property types. We can do a 30-year term, 3, 5, or 7-year ARM, and there's no prepayment penalty. So right now, with rates being where they're at, we're doing some ARM products again. 3, 5, 7 years of fixed, and then we'll adjust after that. Some folks using a program like this, they know I'm only going to hold that property for 3 years, or they know we're probably going to refinance, so they'll look at the ARM. But we'll present different options to the client. They can choose. And then there's a 1% cost on the refinance if used, but that actually just became 2%, so I need to update that. So it's a 2% cost on the refinance if used. Any questions on all of this? Again, I know it's...
I know what an ARM is. They're coming back like now.
Adjustable rate mortgages? Yeah.
Yeah.
And they're not bad loans. The reason they were known as bad loans 15 years ago, you look...
Yeah, because I've got some clients that had some from Wells Fargo like years ago, and
they wanted to strangle them.
they wanted to strangle them.
So here's what happened 15 and 20 years ago. The ARM product became super popular with people who weren't actually qualified to have an ARM product. So when you take out an adjustable rate mortgage today, you have to be able to qualify for the ceiling rate. So that means that we're not just looking at the rate today, we're looking at the highest ceiling rate that that loan could ever achieve in its adjustments, and you have to qualify for that from a debt-to-income ratio perspective. Back then, that wasn't the case. So, and a lot of these loans didn't have ceilings. So they would just adjust. And what happened was when the market went crazy and went haywire, those rates adjusted hard and people couldn't afford them. Or you had people who were not really qualified for those loans, So all I can say is, we showed a slide earlier, and it's in the presentation. The credit score qualifications for mortgage loans today are the highest they've ever been. So people who have loans right now or are getting issued loans right now, they're the best qualified that we've ever seen. So yeah, I'm still leery of ARMs, just to be honest with you, because
I'm not gonna lie to you, I'd be leery of
yeah,
it too.
I mean I am too, and
But I know
sometimes
that they're making a big comeback right now just because of the interest rates.
correct. Sometimes it's the best choice for the buyer, just depending on what they want to do.
Yeah.
We use a system called a total cost analysis, and we show every buyer different loan strategies. So even if they're a VA buyer and all they qualify for is VA, we'll show them 3 different ways they can do that VA loan. Because we believe that every family deserves options and every family deserves to make a choice. We believe in that home ownership dream, and so that's why we do that. Benefits in this particular program: there's no costly bridge loan, no costly cash buyer program. Buyer does not become homeless, right? And that's a big concern. We've had people living in Airbnbs, hotels, this storage unit, that storage unit, trying to figure all this stuff out. Buyer doesn't become homeless when they're doing this. This is great for military family PCSing because we can do multiple states. So they got a home they need to sell here, you're listing their home, but they have to get moved. We can do the buy before you sell, help them to get onto their next duty station. No short-term rental costs, no storage rental costs, no moving twice, sell the existing home, hopefully at top dollar, and you don't lose the deal to an iBuyer. Because that's what we've seen, and that was really kind of what fueled this thing was in the last year and a half, a lot of our agents were telling us, gosh, I just almost got that listing, and then somebody swooped in and offered them a 1%, and I lost it. And if I could have just shown them a way to make what they needed to happen, they would have worked with me. But when I talked to them, they said, Mrs. Agent, I'm sorry, but I have to sell this home now because I need the cash so I can go buy my next home because I don't want to miss out on buying the next home. So it really helps you guys to build more rapport with your buyer and your seller. Make sense? All right, so some scenarios. Buyer wants to have some time to move into their new house. In this case, we can ignore the existing home payment from the DTI in the new home. It's the most simple way to do this program. They have cash, they can buy, or they're a VA buyer, they don't need a down payment, they got some closing cost money, or they're getting it from the seller, whatever. Then we can ignore the DTI on the departing residence, okay? Scenario 2, buyer has funds for down payment but doesn't qualify with both payments. You probably see this often. Call this the contingency, right? How often do we want to remove that contingency? As often as possible, right? Because we want our buyer to look good. And as a listing agent, you don't really want to accept a contingent offer. So this is even something as a listing agent, if you get a contingent offer on a home, you can say, you know what? We've got a lender we know that'll actually help your buyer do a buy before they sell program, can remove the contingency, and we'll take that offer if they qualify. So have them call Waymaker and see if they qualify. You only need to do the loan on the new home, and you can ignore the existing home payment from the DTI just like scenario 1. It's really cool. Scenario 3, client has equity, but not enough funds for the down payment, right? They have equity, but they have no funds. Well, we're going to do the 2 new loans like we talked about earlier. We can do a loan on the existing home for up to 70% of their equity, and we can loan on the new home for 20% down or more, and we can still ignore that payment. So there's a lot of ways we can make this work, guys. It's a strategic advantage. The whole idea of everything I wanted to present to you guys today is how to make this market shift work for you by presenting strategic advantage to your sellers, to your buyers. Make sense? Any thoughts or questions? It's quiet. It's quiet up in here. We need to get some more waffles going. We got waffles and orange juice, all right? Sharice, you have to have a waffle, okay? We brought plenty of waffles. I see the wheels turning.
I mean, the only thing I'd like to add is that, like, even using the arm or using this, it's just a tool that you guys can have in your tool belt whenever something comes up, right? And that's how I look at them, like a HELOC or a second home, like a HELOAN. Like, those are just tools, and sometimes it makes sense for people, and sometimes it really doesn't. And we have those conversations. That's our job. But you have the ability to say, hey, we know a lender who's able to see if this makes sense for you. And you have the ability to make that as a tool. Like, if they need cash out to buy the home, and they want to keep their home, well, hey, let's look at getting a HELOC, or let's look at something, right? And but it's just a tool. And that's how I look at all of them, arms, everything. So nothing's negative, it's just if it's used correctly.
So back to this point right here. We need to convert conversations to active contracts at a higher rate than ever before. This is the way that we're going to gain market share in a shifting market. This is the way that we are going to become the top echelon of real estate agents and lenders in this new market. We've got to be able to take conversations and convert them into somebody who's under contract to sell a home, to buy a home. And the way that we do that is presenting strategy that nobody else has. So I want to give you guys that opportunity where you can present strategy. And so really our pitch, if anything, is we would love to come alongside you and help families live their American dream. That's what we do at Waymaker. That's what we're all about. We do work a little bit differently than a lot of other lenders. We want to issue a pre-approval based on somebody who actually qualifies for a loan, and we want to help you work through the process and become a conversion partner. So I believe that if you have a buyer or a seller and they're on the fence or they don't know what to do, the only way to get them to do what you know they should do is to give them data to drive their decision. It's not just emotion. It has to be driven by data, education, as we were talking about earlier. And that's what we can do, is help you to educate, help to come alongside you, and help you to convert folks who started as a lead, turned into a conversation. How do you make that a contract? That's what we're here to do. That's pretty much it.
Okay, I have a question about investors, and you may have already covered it. Like we said, we have new investors that are wanting to get in.
Yep.
And a lot of them are going to need a lot, significant financing. So how does that work with an investor? If I have this guy, he's like, hey, I just decided I'm going to flip houses. What does that look like in a mortgage concept? Because they have no clue.
They don't know what they want. They don't even know what they want to do. They just know that Chip and JoJo flip houses and it looks easy on TV.
Yeah.
Perfect. Or what's the one that you like? The one that we watch on Netflix?
That's not a house flip.
Oh, okay. I don't know. They love Pinterest. They love the idea, or they love the idea of making money, right?
Yeah.
So I'm going to answer that question, and I'm also going to tell a little bit of a story, if that's okay. Yeah. Natalie and I, my wife Natalie over there, her and I, we bought our first home in Killeen in 2017. It was a VA foreclosure. We were really, really happy because we actually got them to give us some closing cost assistance back then. Pretty crazy. And we flipped that house 2 years later and we made about 40 grand. We took that and we poured it into buying a condo down in Georgetown. We bought that condo and we lived in it. Within a year, we bought our new build home. We built a home. Carruthers built it for us. It's in the Georgetown area. We paid $635,000. That home is now worth over $1 million. My wife and I have taken our net worth from negative 60 grand to over $2 million in the period of 3 years by investing in real estate. I love investing in real estate. It's the only way I've ever seen somebody go from broke to actually having equity and money in a net worth like that. So when we talk to real estate investors, we want them to see that they have all this crazy creative ability, but they have to hone it down to what's your strategy. We got a guy we're working with right now. He came to us, he wanted to buy his first investment property here in Killeen. Every property we've looked at, he's nitpicked it to shreds. And we've had to help educate him, but it's taken some patience with the real estate agent as well to say, okay, Eric, I'll show you another property, buddy, but here's the thing, you gotta look at the numbers. So finally last week, Eric had a breakthrough. And he really looked at the numbers and he saw, I can buy this property for $60,000, I can put 35 or 40 into it. All of a sudden, the after ARV, the after renovation value is about 130. I can put a tenant in there for $900 a month, and the wheels started to turn. And Eric saw how he can build his wealth. But we had to get him focused because when Eric first came to us, he didn't know if he wanted a single family, if he wanted a multifamily. He's like, I got all this money to work with, but I don't know what I want to do. So we talked through a few different strategies with Eric. The first one we looked at was how you can just straight up purchase the home, 25% down, buy it, use your cash to renovate it. The second strategy we looked at, which is really my favorite, is the fix and flip strategy. We have fix and flip financing available where the investor buys the home for 25% down. We get bids in and we get an appraisal done. So you have to have a contractor involved, and it's got to be a good contractor, guys. It has to be a contractor that actually knows how to put information on a piece of paper and send it to us. I know that's a crazy thought, but Natalie and I are working through that right now. We're like, dude, can you just email it to us? He's like, I emailed it. I'm like, to where? To like some crazy abyss? It took 2 weeks to get one of the bids in.
He's like, oh, I forgot the P in Campbell.
I'm like, dude, how do you forget the P in Campbell? It's Camp Bell. It's on a soup can in every grocery store. I love you, Noah, if you happen to see this somewhere. Anyway, so you got to have people who know how to help these folks. So if you're going to work with investors, the first thing that I would recommend is let's get them to understand their strategy. Let's get them to figure out what is your target. And then we've got to get a contractor involved, especially if they're going to put money in the property. And then let's talk fix and flip, because fix and flip is one of the best ways to build wealth fastest. Okay, so how does that work? They purchase the property 25% down. They get money to finance the repairs. and they have up to 12 months to complete that using the contractor. We base the money that they're allowed to get off of the ARV, the after repair value, and that's determined by an appraiser at current market. And once that's all completed, we fund the loan, we get it done, and then at the end of that 12 months, they're either going to sell that home and flip it, or they're going to convert it into a long-term hold where we'll refinance the fix and flip loan into a long-term loan. Does that?
That's awesome. And one of the things I like about what you said is y'all have those conversations because we're not.
Right.
really
No. We're not
educated
expecting you to have those conversations.
Yeah. so
We're
that's-
expecting you to find that contractor who knows how to use a pen.
I got the contract.
Okay. All right. Good. So here's what y'all got to do. You got to bring us somebody who's interested to buy. Hopefully they are willing to have conversations and they're not just trying to be cocky and run the show and, hey, I know what I'm talking about. And they got to be able to be educated, right? At the end of the day, we've got to have a qualified buyer who knows how to be educated. Now, if they don't qualify, we'll walk them through credit repair. We'll walk them through all that stuff. But we want to partner with our realtor partners to help get that person ready. And then we're going to educate them on here are the loan programs that'll work for you. Now, let's work with your realtor and figure out, do you want a single family? Do you want to flip it? Do you want to buy and hold it? What is your expectation? Okay, because everybody's listening to Bigger Pockets, and you Google, flipping a house, and you're going to have a bunch of YouTubers tell you their expertise on how to flip a house. So guys, we're up against incorrect information in the news media. We're up against incorrect information by a bunch of YouTubers who are just trying to make money from ad revenue, and we are the consummate professionals. I don't care if you've only been in the business 6 months. You are a consummate professional. You are a qualified, licensed realtor who is ready to serve and help somebody, and you've got a great, I guess you're the broker, right? You've got a great broker owner and team to help you get it done. So as a mortgage company, we design Waymaker, like the name is there. We want to make a way. That's the whole idea of what we've designed. So we'll come alongside the buyer and help them figure out, what do you actually want to buy? Because if you want to buy a 7-plex in downtown Killeen and sink $2 million into it, which is really not the best choice, you might do better buying several single families over the course of the next 3 years. But we want to help them see how to achieve that dream, because it really starts with a dream, right? The investor comes to you with a dream. Danielle, help me make money. Cool. Let's talk about how. Let's walk through how. Be ready to show them properties, be ready to get on the phone with us, and be ready to work through those different options. But ultimately, the financing end and how to do the fix and flip and how to do all that, we handle all that. We don't expect you to, and we'll educate you guys along the way, but we don't expect you to be able to explain how that loan works. Because quite honestly, I don't want to explain how your real estate contract works. And that's, it's just, it's a partnership.
So and this is the other thing that's been coming up lately is, what is your take on hard money loans?
So, I use them personally. I was just telling my wife we're about to use one on a property we're doing.
Please tell me you didn't write the offer in cash.
No.
Oh, no, we don't.
No. So first of all, cash is a dirty word in my house. I'm a mortgage lender. We're all about leverage. And I love to educate people on why you should put your cash in other places than real estate. Use the minimum down payment, because even at a 10% interest rate, chances are your cash is growing at 12 to 15, 18% somewhere else. And we'll even talk them through all that stuff too. But yeah, so hard money loans are great loans if you got a great hard money lender. They're horrible loans if you have a bad hard money lender. Case in point, Natalie and I just bought a property in Florida off of a guy who used a fix and flip loan, and he didn't have a clue what was going on. And he was selling this property to us, and he was so emotionally involved in the idea that he must have this loan paid off by, what was it, June 4th or something like that? And I said, buddy, I own a mortgage company. Let me just help you through this. Give me your loan officer's name and number. So I called the loan officer. The loan officer was dumb as a box of rocks, but I happened to know through a connection, I knew the owner of the company. So I reached their way, had a conversation, and here it turns out this guy was just really poorly educated by his loan team on what was actually going on with that hard money loan. Hard money loans aren't a bad or scary thing, but you've got to have somebody who can explain it, you've got to have somebody who can execute it, and then you've got to have an exit plan. That's probably the most important thing. Do you have an exit plan? I'm a Bible-believing man of faith, and the Bible's very clear on this one thing. When you don't go building a property or building a house without knowing the cost. You must count the cost first. So I believe in that principle. I'm not going to lend money to somebody who hasn't counted the cost and doesn't understand how to get back out of that loan. Hard money is good money if it's done right. That's the easiest.
Hard money loans have become very
Yeah.
But they're putting out, like, I just went through one yesterday, they put it through as a cash offer, and so it was, we've been having issues with hard money.
So there's hard money lenders out there that will tell you as a realtor, you should craft it as a cash offer. It's a lie.
Yes, it is a lie. And we've had some problems, because I had an investor come to me, and he had this girl out of Georgia who's hard money lender, and she's like, yes, you will write every offer as cash. Well, I'm no longer his agent, because I said I'm not writing a lender offer as cash.
I don't want to lie.
So.
Yeah. And why do you want to win? Why do you want to win under false pretense? This is what I would. And I've asked this question to buyers who want to do that. Why do you want to win under false pretense? When you go to sell this home, do you want somebody to do that to you? And typically, either we break the relationship after that conversation because our values don't match, and I promise you guys that's okay. It is okay to say no, because when you say no and you feel that gut feeling pit in your stomach, this ain't gonna go well. Let them go. Let them go, because you're going to get 3 others. As soon as you let that one go, you're going to get 3 others that actually fit the profile who you want to work with. It's crazy how it works. It's an abundance principle in business that I strongly believe in. If you say no at the right time, you're going to get others. And when it comes to that hard money stuff, there's a lot of lenders that are out there educating realtors. Here's how you get this done. You write it as a cash offer. Well, the problem is then at some point in the transaction, you have to shift to tell the truth and say, well, it's actually this lender, and they're doing this, and now they're taking longer to close because they told me 14 days, but it's really going to take 30, and it doesn't bode well. I've had buyers that we pre-qualified, given the hard money option, the fix and flip option, and then they're like, well, I want to go down to the sheriff's sale and I want to buy with cash. Well, you can't. You don't have cash. Well, but you just told me you can get me the money in 7 to 14 days. Well, yeah, if all the stars align and everything works perfectly, we can. But it's not a cash, so you can't go down to the sheriff's sale and say, I got cash, and put on a bid. You're borrowing somebody's cash. So yes, sure, absolutely. Flip 3 houses, get enough cash, and then go to the sheriff's sale. That's kind of how I would handle that. So there's money to be made for these investors right now. And there's a lot of people, especially around Fort Hood. I mean, we just drove through downtown Killeen. We were looking at the first place we lived together when we first moved here, showing these guys. And I saw, 3 or 4 houses for sale? And I was like, that's probably a good flip. That's probably a good flip. Because I have an eye for this stuff, and I start to see it now that I know it. And you guys, as real estate agents, over the next year, 2 years, you're going to see great opportunities for folks who want to make money as investors. It's a different conversation than somebody who wants to call that place home with their 2.5 children and their 2 SUVs. It's just a very different conversation. But we'll help you with that conversation, and it's not vanilla. It's always a little bit different. So, yeah. It's like our waffle bar. You have different flavors to put on top. So.
Thank y'all so much for
Honored
coming.
to be here. Thank you.
I'm sorry, we were a small group. Some of our people had other stuff. Sharice and I are on the board of directors for the Association of Realtors, so that's why we had to come in late. And,
That's awesome.
but we really appreciate y'all. Thank
Yeah.
you.
Thank you.
Absolutely, you're super welcome. What we'll do, I'm gonna so 2 things. I've got my virtual business card. If you want to scan this, you can save it to your home screen on your phone, and then you have all my information. So if you guys would just indulge me for a moment, and pretend you enjoy my technology.
Came in that text.
Oh, it came in the text too? Okay, cool.
Yeah, it came in the text earlier.
I just didn't know how to save it.
And then Danielle and Sharice, we did we did do an Amazon giveaway. So if you want to enter to win, you're welcome to. You can use that QR. Okay, cool, good deal. Do you want to enter to win a $25 Amazon gift card?
She doesn't like money. She doesn't like gift cards.
Everybody likes money. Y'all wouldn't be sitting here if you didn't like money. Come on.
One thing I do like to say is we like working with people who are busy. So you're like,
Yeah.
sorry for being busy. Like, we'd rather work with realtors who are actually busy. They're realtors
No,
who are like,
don't
"Yeah, let's get some free
don't
stuff."
apologize that you're out moving and shaking. Like that's
It's not. It's just like, I've had y'all come and do all these things, and then like.
There you
everyone's
go.
like,
Yep,
"Oh,
hit
we're
send
doing this,
message.
I'm like,
boom, and then just hit send on that message. It's going to ask you for your name and your email.
He set up his phone to record it. He's gonna send it out and send
Yes.
it to the presentation.
That is
So
perfect.
it's,
And then I have one more thing, which again, this will be on the presentation. I just want you guys to know 2 little value adds and additional benefits we offer to all of our agent partners. Agent Mastermind is a weekly mastermind we do every Tuesday at 11 a.m. Central. It is recorded. We can send out the live recording if you'd like it, but you can register here to be on my Agent Mastermind list. You'll get reminders about it. And every week we're doing something that brings value to building your business. And we're typically bringing on a successful realtor or a successful industry partner. We talk about how to build business with investors. We talk about everything. We talk about CRMs. We talk about how to convert leads. It's really cool. So it's actually hosted by my buddy whose name is also Scotty, interestingly enough. But that's something. And then if you don't have a database activator, HomeBot is huge. Nigel works inside of my HomeBot all the time. We put all of our buyers and sellers into our HomeBot system. So if you haven't heard of it, I give it to you for free. You can put your clients in there. And what it does is it keeps market data on their property in front of them every month, keeps your face and your phone number in front of them every single month. And what gets sent to them is actually a financial digest on their home, and it's beautiful. People open these. We have an open rate of 72% or more, which if you've ever done email marketing, you know you're lucky to get 3 to 5. So this is cool, but again, it'll be in the presentation. You can sign up for that if you need some sort of a database activator. We can help you there. But y'all, it's been a pleasure to come up here. And is it okay if we grab our agent roster and send this out or grab some cards?
Lonnie will get you a copy of
Cool,
that.
awesome. So thank you guys who weren't here. We really appreciate you watching the video. And if you have questions, reach out. We've got all kind of information. We'd love to help you guys make some more money and serve some more families in 2022.
Thank you so
You're welcome. All right, there's still waffles, so come on, eat some waffles, enjoy.
More than waffles. There's blueberries, strawberries, the whole nine.
Lots of fruit. So you're on the board for Fort Hood?
Yes.
Nice to finally
Teresa
meet
and
you.
I both are.
Awesome,
So,
very cool.
Same.
Yeah.
I talked to you on the phone a couple
Yes.
times.
This is Nigel.
Nice to
Finally
meet
meet
you.
you.
Nice to meet you.
Nigel's my my sidekick.
Oh, fun.
Macy moved on to other things like
Yeah.
like making babies. So
I guess that's
a few weeks after you first talked to her, she got pregnant, and she just
Oh,
decided
goodness.
her husband got a new job. He's making
Yeah.
some coin, and she just wants to be a stay-at-home mom.
Yeah,
So
no,
hey,
whatever.
that's awesome. This is my wife Natalie.
Hi,
Hey,
Natalie.
this is Danielle.
Danielle. Nice to meet you.
So yeah, you guys got quite a cool spot here.
Yeah, we're excited about this one.
I know it
like
takes a
this
lot
one.
to build what you're building. So
offices. She has a vision. I love it.
yeah,
Television.
and y'all have
Love it.
like 30-ish agents, something like that.
No, we have 20, and I have one
Okay.
that's going to be coming on as soon as he passes this test for
awesome.
the land passes office.
Very cool.
So,
And you guys are expanding land
I
passes.
know.
yeah.
It's a great spot.
We
Yeah.
had like
Great
a
spot.
little place that was like 100 square feet.
Yeah.
144 square feet.
So that's like
And
that little
so-
waiting area right
yeah,
there.
pretty much. And we had 4 desks crammed in.
Oh my
there.
gosh, I love it.
And so we
Good
have,
for you.
Now we're having a big.
Now we're having September 9th. Y'all are also, we're
Cool.
going to send out invitations. We're gonna
Please
have our
do,
grand
yeah.
Opening, so
One of us will definitely be able to come up for sure. And
And it'll be in
Somebody
Lampasas.
asked you, said, "Oh, so now you're a chain." And you said,
Oh, yeah.
and
So
then
now
I
you're a
couldn't read-
chain?
It wouldn't let me read your comment for some reason.
Yeah.
Something about no, maybe a bungee.
Oh,
That's all
yeah,
I
I'm not
could
a
see.
change up, maybe a